Chola Investment is the next company on the radar. The company has reported a strong performance, sharp profitability, beat driven by lower than expected OPEX and credit costs as well. Arul Selvan is the president and CFO at the company. He's with us as always. Mr. Selvan, good morning. Good to have you with us here, sir. Thanks for joining us. 21% AUM growth, 25% disbursement growth, NIMs, 6.7%. So, I mean, all looking good. So, we'll talk about what the numbers you've posted, sir. But just going ahead, is there a risk of, is it looking a little more turbulent, especially on the truck side because of the overall situation? Fuel costs have not been passed on so far, but I guess at some point it will be if the prices stay so high. The next couple of quarters, how are you looking at it, sir? Just give us an overview.
Yeah, we need to see how much the fuel price goes up and how it will get impacted. But mostly, I think over a cycle, it will get absorbed and it will get passed on. Because most of our customers are sort of earn and pay customers. They're not contractually bound. So for them to pass on the price increase, if any, shouldn't be a problem. But we should also evaluate, will there be any impact on supply side, the availability of loans that could impact the customers. If this is not impacted, I think most of the price increase of fuel will get passed out. And so that shouldn't, in the long run, be an impact for them from their earning potential perspective.
So on the supply side, what did you say? If there is a shortage of?
Shortage of load for them to carry by itself.
I see.
If there is a load, they will pass on the price increase. If there is no load, then their earning potential comes off because
lower utilization, etc. But have you seen that at all emerge in the?
Not so far. But we may. I'm just wanting to say that could be a potential impact area as we move into Q1, Q2.
But you're saying that smaller hikes are kind of if demand is strong. Then yes, it's kind of passed through. It gets absorbed.
Correct. Exactly.
Okay.
Yes.
Got that.
Morning, sir. This is Rima here. Just some numbers, guidance. Your AUM guidance for FY27, margin guidance and credit costs.
AUM guidance stays same, 20 to 23%. Yeah, to anywhere depending on the mix of the business and how they grow over the cycle this year. The margin guidance will be also similar what we reached around 8% NIM we have done for the full year. So I think that we should be able to hold it, factoring in that some of the new businesses will have higher yield. So even if there is a cost of fund hike, I think that should get absorbed. And overall ROTA guidance, we are still working at the PBT ROTA of 3.5%. We should get there for the full year. While for the first 2 quarters, these targets could be slightly lower because in any year, the Q1 and Q2 are seasonally, little slower quarters.
Okay. So 20 to 23% AUM guidance, NIMs around 8%, and the credit cost number for FY27?
Should be around 1.5, 1.5 to 1.6. That would be our number.
All right. Good morning, sir. Always good to have you on the show, sir. We have got the broad numbers out of the way. Then let's talk about part of your book, the gold portfolio. What's the guidance out there for the coming year, FY27, FY28?
Gold has been a very small portfolio right now. It will certainly grow faster, but we are looking at putting new branches, mostly in the southern part of the country. So we will be growing the branches and we will be scaling gold as a business as we move into FY27. But I think FY27, gold will not be a large impact on the overall number.
Okay. All right. What about capital raising plans, sir? Some part of the street believes that's in the offing. Are there any plans on that front? And by when can be quantum? And which quarter should we hear about capital raising plans, if any?
I'm not able to comment about the capital raising right now. Right now, we are comfortable on the capital adequacy. We are, the Tier 1 is, significantly larger, between 14 to 15%. Having said that, as and when opportune, situation arises, we will certainly look at it. Right now, our price is still much lower than what it had peaked, so we should wait for some more time, is my guess.
But there could be a possibility, right? A capital raising plan?
Depends on the growth opportunities. If the growth is coming steady and we have a good growth runway, certainly we should look at it, because that is also an important aspect as we grow the book and we are of a considerable size, and we need to look at capital raising in the next few quarters, whether it is within FY27 or beyond. We will take a view. Yeah.
So you also have something that you call the new business, which is basically beyond your traditional vehicle financing, LAP, home loans. And this is about 13% of your AUM. You've got secure business, personal loans, consumer, small enterprise loans, SME loans in this segment. And it's growing well. It's 21% of your disbursements as of Q4 FY26. What's the guidance on new business? How does it ramp up and how does it affect your return ratios?
So the new businesses, the unsecured part would still be at around the 10% overall AUM. That is what we have stated, and we will keep it within that sort of a broad threshold. The other businesses, the SBPL is small, very highly profitable, but it will grow slowly because operationally it has to be done in a very slow pace to understand the contours of this business before really scaling them up. FY27, it will again grow much faster than the rest of the businesses, but being a smaller base, its impact on the overall AUM number would still be not very significant. Gold, I spoke about it earlier. It will also grow from a presence perspective with regard to larger number of branches. And we will be certainly scaling up the volumes on the AUM, significantly larger growth number if you consider only gold as the base. But overall AUM, it will still be a very small number to influence the overall AUM growth. SME, yes, it will grow. SME, we saw the supply chain part of it slowing down last year. We consciously brought down the supply chain part of it because it was not profitable. But now with the base effect being removed, it will also show good growth.
Yeah.
Mr. Selvan, we'll leave it there, sir. Thank you very much for joining us. Good speaking with you. Appreciate you joining us here on CNBC-TV18. Well, I think, that is the management of Chola with a perspective. And markets, of course, are